Greetings, market rebels. Welcome to this week's macro measure combined with the sector situation video of olden times. It is, let's see, what are we at? Friday, the 12th of September, 2025. Here's the Trustee Market Rebellion disclaimer. Here is Trustee Market Rebellion intellectual property rights notice. And then here is this week's slide. I'm Wayne. We'll get started. We'll get right into it. This is just flashing last week's slide so everyone has a general sense of what we talked about. We've been in this kind of where are we to bottom line game plan type of thing now for a while, since the market really wasn't advancing, or when it did, it was advancing relatively mildly and then pulling back. This week changed that a little bit, but not as much as you would hope. And we'll, I think, see that. But we will now move beyond that to, I'm just doing a quick wrap on that. You can always pause and check out some of the stuff if you want to recollect what we did talk about. This week, I'm going with, or am I? It doesn't seem like it's advancing my slide for me. Oh, there it is, I think. Okay, yeah, now it is. So this week, I'm going with more bull with a side of froth. The froth really isn't showing up on the charts as much as it is with, I think, individual moves, right, that we've seen that are just utterly ridiculous, right, at times. And this really only happens during these really exuberant, I shouldn't say really only, but mostly happens during these really exuberant, bubbly phases, kind of like we're in right now. Not saying that in any other way other than to say that that's when it typically does happen. You see more of that. You also see lower tier names start to see UOA, heavily shorted lower tier names seeing UOA, things like that. These are stocks that are left behind that haven't been able to get off the mat in a bull market that's been running for 2 years plus at this point, and yet they're now they're perking up, and this is often late stage for the rally mode that we're in presently when this happens, or it's right before you really see super melty blow offish type moves higher, right, where things just go bonkers. And so it's been really that's been elusive, right, where that melt up blow off situation comes in. That really has been elusive now for a while. Every time I've seen this kind of UOA, it's actually marked the temporary top, right, where we have a pullback not too long thereafter. And most of the pullbacks have been uh, relatively mild, run of the mill. So just to put things in perspective. So going through things, we'll talk about that we haven't reached the mid-channel price. The VIX, I stepped into the VIX. If it goes lower, I'm adding more. If it goes higher, I'm probably adding more. But I just stepped in a little bit there with an upside call vertical, just that's going to carry me out now for the next several months. I just want to have a little bit of a hedge on that way. Um, and the rough seasonality that we know about from past market history, that's been forestalled. I'll flash one tab and we'll get into that and cover it very quickly. But I still think that the argument we were making and have been making for the longest time as to what could be driving a good part of this is the underinvested. There's been times when it seemed like that caught up with some data, and then other times I've seen where it's mainly just been underinvested with no countervailing or counterbalancing argument. And I keep seeing more of that more things that I have come across online are telling me that that's keeping things aloft. Just people publishing data that unfortunately I don't have access to. I don't have those databases that I can tap like that, which I would love to have, by the way, but I just don't. Anyway, so I would say that we're right again where we were, which is much still, this is probably like a few weeks ago, much still looks very good, but risks are still percolating. Probably 3 weeks ago, maybe last week we could have said that. This concern that started to develop, that didn't exacerbate at all that we were concerned if it did, that would be a problem. Instead, it was fixed, right? They actually fixed this to a degree, although NVIDIA did not really scream towards the end of the week, but they did move the SMH up significantly, and they use other names, in which to really do that. We had LRCX and Avgo and a couple other semis, is my recollection, in the UOA service. So that was a really nice stuff that happened there. We talked about point counterpoint a few weeks ago with a lot of tabs, but the AAII sentiment survey is now even more bearish. So I think on that note, I'm going to reposition things and just make sure we get to these things and get into more of the charting, because we probably need to. So let me just take a moment to reposition things, and let me just pull this down here, minimize this, and I'll leave a chart up behind it, and then we could just minimize that. So let me just get to another share for us, and this should get us set up with the right screen. And so, yes, this is the right screen. Hopefully you all can see my cursor, and you can see that we were noting, right, that the preponderance, right, of bearish sentiment has been there now for some time. So even back, I think we might have talked about this, skipped it, and then came back to it, or maybe not shown the graphic. I can't remember, but we really, despite this is where we're at odds with seasonality. So the seasonality is typically not so wonderful, as many know, in September, October. I'm sorry, August, September. And here we are, right, approaching the midpoint of September, and we're making new all-time highs. Everything's all news is basically being treated as good news. What would seem to be headline disappointment turns out to be dramatic movement based off of dubious claims, things like that are happening. And I just feel as though, from having been through this so many times, it's this kind of data or this type of information that will help that cause. In other words, keep that market that's defying kind of the expectations, how that just stays in motion. And you can just see that the historical average for bearishness is normally outweighed by bullishness. It's basically about the same as neutrality, right in the middle. This is what's the historical norm is. And we've just continued to have this preponderance of bearishness creep in. And as we've been saying, really, since we've been doing these videos now for, I don't even know, 3 years, whatever it's come to, and even, well, webinars and stuff like that, well before that, years before that. But yeah, I mean, that's really a contra indicator, right? When you see this, it often does help the market sort of leave folks bewildered. And so you might say, well, really, but that's been my experience more times than not. It's not as though the market can't fall, but when you get this much bearishness, it's probably people just getting, frustrated, having sold out. It keeps running, whatever the case may be. But yeah, I mean, that makes it tough. You really would prefer to see, before corrections, you often see everything flip the other way, where things are just absolutely too bullish. And then you get the corrective activity that follows somewhat thereafter. It can be a week, it can be a month, but usually when the bullishness gets overdone, we tend to correct, because buyers have ultimately become satiated, and there's corrective activity. But anyway, I just wanted to flash that. I think that, and the underinvested gang out there, they know who they are. They are the ones that are really probably helping to keep this buoyed to this point. And I think we did maintain on one point on one slide, and I might just use this one here just because it'll be easy for us to see. But I think we did note that somewhere that, yeah, this line right here, the downside will need news or a break in market. So something has to happen. Like there's a real problem that develops within the markets somewhere in the world that has that Asian contagion types of chain reaction we've seen many times. That type of thing, which, it could happen. It could come out of nowhere. But with the sentiment survey, this bullish, and really folks underinvested, I just really continue to think that that just continues to help this market waft higher. And I just think absent news or a break in the markets, it's going to be very difficult to see this crack, right? It's going to take a catalyst. And we just, at the moment, I don't, not that there aren't plenty of things out there, it's just that I don't see anything breaking that will break the market, so to speak. So, having said that, let's get into the charts. So, what I did, just because I wanted to not go so heavy on some of the things we have been going on and kind of get more stuff in here in case we continue to run or back up. I did some fib work so we were ready to go that could save time. So we'll first talk about, right, we had this sort of false breakout here. We had the second false breakout here. And then one thing that you can note is that what they did, of course, using the news calendar, which you have to, as I always say, it's really good to have that PDF on one screen or just print it and tape it on the wall or whatever, put it on your desk or whatever that you're trading from so you know, because these guys are the masters of maneuvering around and around the news calendar and also using it to their maximum advantage. But this is obviously SPY in the daily, and you could see that after that rough candle there, which was another, again, we're calling it another false breakout, sort of similar to this attempt here. This didn't even eclipse that high though, but you just couldn't do it. You couldn't do it. You couldn't do it. And then they start pulling it back, but there was no follow through on the selling. So that was one of the differences where, right, last time when we saw these attempts that failed, even back in here, right, you got to pull back, you got to pull back, you got to pull back. They didn't let that happen. So that was one little thing that where I think it helps you to reverse your thinking a little and say, wow, they're not even letting this go down like they have versus prior false breakouts. Just something to think about. If you don't think of it that way, that's something that started helping me to think about it that way. Anyway, they've got this thing two levels, but you'll note the channel that we added a midline, a really crude midline in. I'll kind of make an adjustment on that in a little bit now, but they haven't really even gotten that to that channel midline yet. So that's the interesting thing, right? That again, we advance, but it's really been sort of right by their standards. It hasn't been rip roaring. Now, that's not to say this wasn't a good week, right? Where you open, you stabilize, and then you start to go. That's good. I'm glad because we put a lot. I don't know how well everything did, frankly, but we had a lot of bullish paper in UOA early this week. We had a lot on the Friday before that I tried to lay on the table for subscribers so they were ready to go because we just weren't breaking, right? There just has been a real dearth of bullish paper. I'm sorry, bearish paper. But all the bullish paper, the way that I look at it is all the bullish paper hasn't been, every single one of them we know will not be the stellar mover, right? We just know that. So that's obviously what we try to do in the UOA Pro service is we try to really sort of sift that through and try to refine it, knowing, right, that you'll always miss some, but hopefully you'll have a really nice sort of short list of UOA candidates with a lot of information, hopefully, to go along with it other than just the UOA hit. But you can see that channel that we've been working with, and you really haven't gotten to mid-channel yet. If you did get to mid-channel, which even if I tweak this down a little bit, you didn't really get there, but you got close maybe. But that's the thing, right? If it fails from mid-channel, again, not really a good sign. So we have to be on guard for that. It did get quite vertical, right? As you can see it here after Monday's session. So you're kind of short-term vertical again. You don't really want to pick fights with this stuff. If you do, you've got to get in early and you've got to be very disciplined about what I call the quick trim, in my opinion, which is when let's say you're a 10 lot trader or whatever the case may be, what you do is you get in at a very aggressive sort of break of something important, and that in this case could be below that support line I just drew. This is what I don't do this on my videos, but this is what I do. Part of what I do when I'm trading, when I'm evaluating things, I like to put my lines all over the place so I really get things framed out, and it helps me understand what's going on. And so, yeah, I would say, look, if you start breaking down maybe below Thursday's open, or that open on Wednesday, that's a problem. That's not too far from where you are, but you really can't wait right all the way to here. Let's say hey, I want to see a break of the 20 day. It's not, I shouldn't say you really can. It's just that for practical purposes, right, they don't let you get a lot of breakdowns that follow through that much more, right? Especially when you're in this channel. So you would be, if you're dedicated to just trading on support and resistance, yes, you could wait for the 20 day to get cracked because it's essentially the lower part of our channel right now. And there wouldn't be anything wrong with that. But if you wanted to be a short term jump in for a little pullback type, you've got to do it early, and then you get your quick trim in where you sell 2 of your 10, 3 of your 10, and then maybe you roll the rest down. This way, right, if they do start to hold at support and reverse the market back up like they do so often in an uptrend, right, you're still eking out a little bit of a gain for your efforts. And a lot of people that I tell that to that have never thought about it that way, it's not like it's some really incredible insight. It's something that really helped me psychologically when I traded counter trend. So I always try to remember to share that if I can. But anyway, that's the kind of thing I would do. And then look, if your other 7 that you roll keep going, you're still loving it, right? Because it paid off maybe more than you even expected in many cases. So unless there's a news driver, which that's a whole different story, a real serious news driver that's of material, right? Material stuff that really matters, that's going to really change the dynamics in the market, at least in the short run. Anyway, so you got pretty close to some of the levels, but let's get to the next levels up if they keep it going. You've got to get towards 665, 667. So you may as well say 665, 666 is probably where the line would put you once you worked your way up if it took a little while. And then 667 beyond that is 671. 671. So those, I think, are your next levels up. If you want to focus on things that are within striking distance, if you think you can do better than that, that would be more than a 2% surge. And we don't really see that at this late stage, but you never know. But the next one up would be 678. As far as the downside goes, I think you have to come back to where we have this little bit of reaction to price right here. And that's going to put you at about let's call it 649. So down a little bit more than 1%. Then you're looking at your 20 day there in light blue, 646, just nuts and bolts, technical analysis, nothing fancy. And that's a bigger deal, I think, than it looks like, because that puts you at the bottom of the channel if you draw through this low, which I did to get a better idea of where the channel really is. That's going to basically be the 50 day, right? So your next level really becomes the 50 day, unless you want to do a bunch of fib retracement overlays, which I'm not doing. But I just wanted to make sure everybody had levels, because the report, I'm sorry, the sentiments within our report are essentially the same, where you can't really say that there's a big problem in breadth. You can't say there's a big problem in the sectors. You can't say that there's massive divergences forming in different ways on the charts. It's just not happening. There's nothing objectively, there's nothing really wrong, right, with things. And it's just really more of a case of the seasonality that has us being a little more cognizant of that, rather than just believing we go full rip roaring. And I still think there's a lot percolating out there, more than, let's say, there was in the summer. So with that in mind, I think it bears watching, and you're probably better off being prudent. But the Qs finally got going and did their thing, right? You make a new all-time high. You don't close too far off of it. Next level up, let's round that to just 590. So that's not even right, about a 0.5%. And then after that, you're going to be at 599. So you may as well say 600. So 590 and 600, and is that doable in 1 week? Sure. 2.5% burst. Yeah. And I mean, and then there's still plenty of potential beyond that, because if you're somebody like me that's a believer in channels and so on and so forth, which I am, if we extend this out, the upside of the channel and what it would take to get, well, it didn't like that I went off the screen there. I think we try to bring this back in towards a better level. Maybe like I'll have to truncate one candle, but that'll give us a better line to work with. But yeah, I mean, you could see that if we go all the way up and through, I mean, you've got plenty more room there to go where you're not really tapping against something. And so, it when we've done this in the past, it seems like you're really far away from it. How are you going to get there? But inevitably they find a way to do it, right? That's what they do. They find a way to do it. So I don't think you could say, well, there isn't enough reward left, and I'm getting really worried. I mean, I still think there's enough opportunity, and with the kind of moves we've seen in some things, and I'm not trying to just like toot my own horn or any, I'm just know these from because they were in my service, right? My main service that I spend most of my time in. And this is the kind of moves that are happening. I mean, we got this thing in. I don't remember where we were on it, but let's just go back to right the start of the month, which is 10 calendar days ago. And this thing makes a 30 something percent move in just a few weeks, right? This is not some crazy, new stock that people don't know how to price. I mean, this is a really, right, this Lamb Research has been around for a really long time. You have this big, earnings type burst on this one. Tesla, we had an idea that was good until last week, and then I think it hung in there, and then we had some more paper where the paper showed up this week. So naturally, I updated that for subscribers, and it really, you could see what happened in Tesla. So then we also had like UNH, and I'm just saying these are established companies or larger companies, and these things are just making really, really strong moves. I think I put a couple things in. I want to say today, like one of them I put in today was, and a guy had requested more trading levels to maybe hedge at, right, or make adjustments at by the end of the day, and just the kind of moves that are happening, like a 10% move here, just in one session. So I don't even remember where we got in and triggered. I'm just saying that the stocks themselves are just really running, and this is when there's a great chance that to make a lot of money because let's say the alpha or outperformance potential from the underlying movement is there naturally. When you're playing with options, you can get amazing returns because you're using shorter term options that give you incredible leverage, and that's what we try to do. So anyway, I'm just saying there's plenty of opportunity there. Let's go back, make sure we covered the cues. But yeah, I think on the downside in the cues, right, you probably have to start with that, maybe that area you hesitated at, 583-ish, we'll round it off to. Then I'd come in here and I would split the difference between the 10 and the 20 just to have a little bit closer of a level to work with. And that's going to be the 15, and that's going to be 576, we'll call it. Right. And so beyond that, I think you're also looking at your 50-day, should you have something develop, and that's going to be at about 568. Right. So that ought to cover folks that look for the levels each week. And like I said, I don't even have time. I don't know what happened to I do maybe know what happened to I have another fib that I put on here. I'm trying to, it didn't save for some reason. Well, that's my bad. Well, that's okay. I think all of you know, we know where the upside really is in the IWM, and that's going to be at 540. I'm sorry, at 245. We know that if it gets going, we've been talking about it for a very long time, and we think and even this sort of projected move, it comes in right about there. So 245 is the upside. If you want to say that you need a closer level to work with, if you trade that on the long side, go with the 240. We'll call it 241.43. That's because it just have to. So 241.43, then 244.75. Probably right. Your first downside is going to be right in here where these lows. There's a lot of action that just sort of worked around there. So I'd say there's makings of a mini flat line or horizontal support, 235.54. And then after that is your 20-day and at 233.70. And then after that, right, there's probably going to be another flat line that comes in. You probably could say 230, and then your 50-day is going to be at 227-ish, right about 227. And then I'll go over to the diamonds. But you can see that for the most part, the Qs and the spiders, the leadership, they've been continuing to do their thing. The diamonds, I've got a couple of things laid out for us. So the next one is 465, and then 467. Oh wait, did we talk about this? No. Oh no, this just happens to be the same thing. The 467. I thought maybe I had jumped to the wrong symbol before, but those are pretty close. Those are where you end up next. Beyond that, I've got a 479 number, so I guess if it really starts trucking, you're up there. Here, I probably have to use a 20 due to proximity, right? And that's at 450, 440, right? So that's down about 1%. Then I think you have to really favor this flatline-ish situation near 450. I think you just do. And then if you want to just dovetail that in with your 50-day, which is 448.29. So those are the levels there. But as you can see, there's a new all-time high here. Even you get the all-time. We talked about that I think a few weeks ago that it could actually the diamonds could have potential if certain things got going and start catching up more towards the Qs and of course the SPY, which was leading everything. That seems to have happened. The IWM's been working to an extent, but not as well as maybe someone who sees the potential the way I do in here. You'd like to see it really bust and go. Maybe it will. We'll have to see. We don't know. We don't know what next week holds, let alone other announcements of this, that, and the other thing. But I just want to make the case quickly and then put it to bed without going into great detail that I'll just do what I always do and change it to SPY so everyone knows we're talking about the market, and this is really these indicators are independent of the symbol. And you can just see, right, that on the advanced decline cumulative average, like today was a little bit of a profit taking maybe finish for the week. And so you backed off the highest high and you backed off the recent high here. And there's a little, you could say, if you want to make a case, there's a little bit of divergence building here and there with different things. You might be able to do that, but it's not really widespread, right? The biggest probably disappointment of them all are the McClellans, right? The McClellan summation index has not gotten anywhere close to the really strong highs it had back here. And your McClellan oscillator isn't really in love with what's happening yet or tracking it all the way up either. So if you want to really say, well, there's a problem there, I mean, that's what I would point to as off of this group of indicators. That's what I would point to as my biggest problem area where I look at things. And I'm not dismissing the McClellans either. I'm just saying that yes, they are flashing that, and yes, maybe you want to just continue to be prudent if you want to put some stock in things like that. But realistically, other things are not really confirming that to where I've got this major problem. It doesn't mean we can't see a break in things. It just going back to a regular chart to really see a break in things, you have to break. Usually, to see a break in things, you have to break something important. And we're even so far stretched from the 10-day in the SPY in white that it would be quite a fall just to get back to it, right? And that's your first SMA line of something breaking. Then beyond that, this channel requires the 20, which is a little below there. So if anything, this thing would be like really the victim of its own success, where because it's continued to go without really having a strong pullback for so long, it's really pulling things up with it so significantly, consistently now, right after bouncing off of this low and re-energizing. Now that it's pulling things up again in a more meaningful way, it's going to pull that 20-day, which is really still near the low end of our channel. That's the best thing I could say about where you'd get a crack. And that to me, you need to fall at least a couple percent before you're even thinking about that. Now, it's sort of a thing where as long as we're away from there, I'm not too worried. But when we do get there, I would start to get a lot more worried. You could say, well, why get worried? And I'm more worried. It would really be news dependent, right? Depending on what is driving this thing to sell off. Or it would just be like, hey, man, that seasonality that looked like it wasn't going to show up, maybe it's probably showing up a little bit. So it would be more of that because of the seasonality. Now, if this kind of thing were happening absent news where we did sell off in, let's say, right middle to late November, I'd be like, hey, man, why is this happening? That would really kind of leave me scratching my head. But when you have a normally rough period, just the way things are historically, for reasons that are maybe not so obvious, but maybe they make sense if you knew what they were, they would make sense. But anyway, that's where I'm at on that, where I would be like, wow, okay, this is probably happening again, like it typically does. I've lived through many things like that, especially and year-end rallies where they turn and burn, and you're just like, well, you can't really be surprised that they're doing this because this is what they try to do. So, right, just go with it. It's really the nature of things, and many times, right? It's not, if it were all random, you wouldn't have the turn and burn so frequently at year's end. You'd have something that's more like, okay, there'd be plenty of dormant periods where nothing happened. There'd be some bearish, really bearish stuff happening. There'd be really bullish and everything in between. But we all kind of know that have been around. It's not the way that it typically works in many cases. So we looked at breadth quickly, like we always do, because we don't really belabor that. And then let's look at sectors. And the sectors are over here. Let's bring those over. And I wanted to talk more about these this week because there were some interesting developments. And as we said, XLK did start to work and try to break out. It's above the high now. And it did start trying to catch up to XLC, which still remains otherworldly in terms of how high it is. They're trying to regroup a little bit here in energy. You can see that XLF is trying to work back up and it's on the door of the high. You've got even real estate going back up, right? And you've got this breakout attempt happening in healthcare, right? So maybe this is just rotation. Maybe it's slight defensive, but maybe it's just hey, this stuff's gotten a little overdone to the upside here or there. Let me go pick up things like UNH that I think are going to make a comeback. Could be, I don't know. These are for the funds that are really dabbling in the big names and blue chip type things. Anyway, your discretionary, definitely look at that, right? That's what we were hoping to see. The discretionary started making its move. It's really right a stone's throw from the high that we had back here late last year. Your staples have kind of stayed on the mat and they're not breaking down, but they're near the lows they've been for quite a bit of since the rally started, right off of those lows. And the other good thing that's happening, besides the XLY sort of trying to take over from XLP, you're working your way back up in transports. And I think a lot of people would like to see this that are somewhat old school. But yeah, if you start to see this go, it usually makes, myself included, people just feel a lot better when you've got energy and demand, when you've got financials acting well, and when you've got transports going. And yeah, so this is working its way back up. Did not have a great week or anything like that, but it's hanging in there, working its way up. And so if that starts breaking out, that would really help the party in terms of encouraging things. Remember, IWM is only a few percent away from a key level that's been keeping it tamped down for years. As I call them, the Dow sectors, XLB, XLI, old Dow, I guess I should be calling them really, but they're really lingering too, not too far. And then energy got it going again, right? So, and that's part of maybe the crypto thing that we had. I was in some things. I was in some pretty good trades overall this week but I just again don't have the time to focus on them as much as I'd like. But yeah, some of those were in crypto. Some of them were in the what do you call it, the quantum area. But I'll talk about that briefly. But anyway, look, just if you look at those sectors, and then we'll throw in, let's say, I don't, oh, that's right, it disappears behind here for some reason. If we look at XAU, right, we know look at that. I mean, that's just like I said, I've got out of options for, no, not all my options actually, now that I think about it, because I've got a couple things, but most of my options I shut down, and I'm just staying with some of the long underlyings and different things that are in this space. But that has really been performing, and that really hung in there. And silver came to life. We did have another silver hit, so I just put that out as an update. Tried to have a long-standing idea in SLV for as long as I could, and now that's where we just really advanced in those things. But yeah, that's worked. Let's see. I think I was looking at this too. This has not gone. We did see some paper last week, I think, but it's sort of tailed off. This has stopped sort of going. Um, just kind of on a side note with in that space where that's sort of stopped a little bit for now, but we'll see what we'll see what happens next in transports and other things. One good thing if you're new to this is to start to see if right if you go look at some of the names inside of a space and you see them shaping up. And this is what brings me to my extremely frustrating situation where Microsoft was doing an update and it wouldn't let me into my computer, and I could not get things going in time. And I think many of you probably know that I don't really do table pounding, but I had my Ion Q stuff I had to close out a few weeks ago, and they weren't they weren't working, and I don't remember where I closed them out or whatever, but I had alerts and all that stuff set, and my son was keeping an eye on things for me. And I saw how things closed, and I had a lot of responsibilities with people in town and different things, and did not even realize that Microsoft did an update on Windows and kept me out of it because it was processing that when I needed to go log in and set things up. And it really screwed me up because the market opened and I was starting to get ready looking at UOA, trying to scramble, and then it just bat out of held on me. And that's just life. Unfortunately, that's just life because again, I'm not much of a table pounder, but this stock is one that I really liked the charts and thought this could really do something. And then lo and behold, it did. And so I really can't say too many bad things because other things did. I did get involved in QBTS, and I got involved in QS and stuff like that. So and other different little things that I was in and out of. I can't remember. I think I was in Riot. Yeah, I was in Riot. I got lucky in there and I just said when it popped the day that it did, and I started seeing some signs that were a little concerning. That coin was kind of chilling out a little bit, not really going like I thought it should get to the 50, and it wasn't really trying. I just kind of was like, okay, I'm going to set an alert and get back in. And that really brings me to the Ion Q because, right, you probably won't have a Microsoft update type thing happening. It keeps you in suspended animation and with a lot of expletives flying out of your mouth. But these alerts that you just have to keep going back to are time and time again, because if you don't want to lose track of something, it's better to get an alert, reset it. Just get in the habit of doing that if you're new, because you will regret if you forget to do this and then something like this happens. That's not really the case with me. I'm just saying that used to happen to me when I would get pulled away with something else and then not set alerts. The other one is, I talked about this in cocktail hour, right? Let's just cover this one because we had paper that and this started to really, they showed up at the right time, and things are, clearly have worked out for bulls recently. But after this big smashing, right, and you go sideways and you're basing for a little while, you might be tempted to set an alert that when it gets towards the upper end of the range, let me know. This was one of my points about alert setting. What you have to do too, though, in my opinion, is you keep setting downside alerts, because obviously, right, if the technicals support you doing so, you would like to catch it from an even lower level if the technicals support you doing so, and the technicals here tell you not to get in yet. So you have to, if let's say it drops another $5, you set an alert. It drops another 5 and you have an alert there. Another 5 or 10, you have an alert there. And this way, right, once it starts dropping to a certain point, you keep moving not only the downside alert, but your upside alert there as well. Then you could catch it right from an earlier stage, because you're not just sitting there with the one initial alert you set way back when up here, waiting for it to get all the way back there, but you lose track of it. And this is something that used to plague me too before I got into the habit of doing stuff like that. So I just wanted to share that as well. So overall, I think that's really the coverage. I really just, there's not a lot for me to sit there and pick apart that I can see. I'm just going to go through my quick reminders on this one. But I'm still sticking with this, right? You got all these things that are just continue to head up all together. That's not normal. I think we're really same kind of reminder as last week. I still think we're at the advanced rally stage, but we're still sub mid channel. But as we covered, you can't say there isn't a lot of potential still. There is. You could still have several more percent before you even get close to the top of the channel we're working in. And the top of the channel, by the way, isn't a magic stopping point where you just can't go beyond it. It's not like the universal speed limit that light is supposedly is, right? It's just that that's a good idea of I think where the potential lies. You can always throw over and really go beyond that, of course, in a real melt up. But that's usually a pretty good guideline to shoot of what to shoot for. If it does go over dramatically, usually that's a great time for you to really just I won't say liquidate, but really overroll and reduce your risk when it overshoots by a lot. This is pretty much the same. I think it's just going to be a news driver that has to emerge because that I just don't see what will take this down right now. They've got the Fed coming, they've got their rates going down, which historically is not the wonderful development for the stock market, but you don't tell that to anyone right now. That's the historical track record after the rates start to fall is not really a great one. So just be aware of that. And then you still have the Trump factor, with news. You still have all these things making new all-time, well, not all-time highs, but gold still near the all-time highs. You got stocks at all-time highs. You got bonds powering up, right? So I'm still sticking with the boring stuff we've had. But look, when the market stays in a mode and there's really no shift in the dynamic, there's no reason for us other than new developments or wrinkles to really say much about it or uh, dwell on it, right? And so that's what we try not to do. And I'm just trying to be objective. I just don't see big problems, and I'm a person that likes to keep an eye out for potential big problems because I don't want to get caught, right, sleeping and lulled like a lot of people are right now. I want to be able to say this is getting real, and I'm going to really neutralize a lot of my risk or hedge this or whatever the case may be. I do think just because there's so many things percolating that having my VIX call hedge on is something I want right now. I'm going to take some money off the table to do more of that and other things, and just beef that up from where it is, probably by a factor of like 3 or 4. I've just sort of got started dabbling with it, and then I'm going to go from there. And I hope that it's all, really unnecessary. I really probably won't do that much more of it though until I see some reason to add to it. So I'm not just going to, if the VIX drops down where they've got it with a 12 handle on it, I'd probably change my mind and then add some, of course, at that low level of something similar to what I have now. But I'm not going to really push it. I just want to have something on just in case we have an all hell breaks loose type of scenario, with what's potentially coming down the pike and how the market tends to act after we do see the rate reductions. So a lot of things are really out of whack. I do have a couple of charts that I'll maybe get to next week that I came across that are just kind of saying that something's either the market's either really wrong or I'm sorry, the market's either really right, and or the market could end up being really wrong. And these things have been fairly reliable in the past, and so I'd say more than fairly reliable, really. So that's got me concerned a little bit. I just don't see it happening immediately, but because something can emerge from the blue, I just decided to put on about a quarter of what I plan to put on, and I am still long a bunch of things, so I'm not really don't want to make it sound like I'm doom and glooming or something like that right now. I'm not objectively. I think right. I just feel like once you get to a Fed meeting, they've often sort of said party over, take profits right after Fed meetings. Something that doesn't always persist for weeks or months. I'm just saying that does happen. So I think it's just smart, prudent, and that's how I try to operate. So on that note, I'm going to wrap up. I'm going to wish you all a wonderful weekend. If you get a chance to check out the video soon, early on the weekend. I'm clearly losing my voice. It's been a really busy week. Got a really long, busy weekend ahead of me and all kinds of stuff going on as usual. So, on that note, everyone take care and thanks for tuning in.